Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin, I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, Fintech is on fire right now, as we all know, and perhaps no subsector more so than crypto. Sila ticks both those boxes, and so I'm delighted to be joined now by the company's co-founder and CEO, Shamir Karkal. Great to see you, Shamir.
Great to see you as well, Elliot, and thank you for having me.
And I think you're the first founder maybe that we've had coming to us from Portland, Oregon. How are things over there?
Things are going great. I think just like a lot of other places, we're recovering from the pandemic, but it's great to see the lovely weather and the city beginning to fill up with people and almost like life's returning, right? So super happy to see that.
Great. And so tell us more about Sila.
So Sila is a fintech and crypto payments platform. The core of our product is a REST over HTTP API platform, which allows our customers to build their own apps with fintech capabilities and use us as the backend, right? These apps are doing everything from PFM apps to commercial real estate to NFTs to crypto exchanges. We have a wide variety of customers. I think across our 100 plus customer base, it's over 25 different use cases that are represented. And the core capabilities of the platform are onboarding individuals and businesses via API, verifying their identity, doing that in a US compliant fashion and doing all the compliance behind the scenes, and then linking bank accounts, creating digital wallets, doing ACH and wire payments. So we'll soon be adding card payments as well, and really acting as the foundation behind which our customers can build most of their infrastructure. One of the cool things that we do is that we give our customers the ability to take some of those payments and wallets and push them to a blockchain using our smart contract on Ethereum, and they can then program with that using our stablecoin, right? And especially for some of our crypto customers, the ones who are doing NFTs, it's a really compelling capability and allows them to build their platforms in a very elegant fashion.
I think at some point we need to have a very deep discussion about NFTs, non-fungible tokens in general. You've raised, I think, $20 million so far. And I was reading in the New York Times how fast the process was, at least relative to your first startup. How easy, as a fintech that's actually got prospects, I suppose, is it to raise funds these days?
I'm not sure I'd call it easy as yet, but it's definitely vastly easier than it used to be. I think we kept track at Simple, which was my first startup 12 years ago, and we had to talk to over 70 different venture firms, 70 actually, to raise our Series A. Now, in 2010, a Series A was 2.5 million, right? For our recent Series A round, which was earlier this year, I don't remember the exact numbers, but we probably spoke to like 15, 20 funds, and the whole process took less than 6 weeks. And we were still scheduling with a lot of people, and it was already over, right? And I think that's probably par for the course. I mean, I've spoken to a lot of entrepreneurs, and we support a lot of them, right? Like several of our customers have raised A's and B's and are raising them right now. And it does feel like for the better companies, the ones which have good teams, good stories and have clear traction, raising money right now is not so much about how, but more about how much.
And I think you were only founded in 2018. Can you give us a sense of the traction, the revenues, maybe the valuation? Perhaps you won't give us that you've hit already.
Sure. I mean, we've been live for over 2 years now. We launched in October of 19. As you said, we were founded in 2018. And over that time frame, we have onboarded 100 plus customers, more than 50 of whom are actually live in production. Revenues are still small, still early stage. We're in that 1 to 5 million ARR range, but growing rapidly. This year we expect to grow revenue 4x, over the course of the year. And if we do everything right, we should grow it that much or more next year. And it's really just it's really just almost like a symptom of what's happening across the broader industry. As our customers grow and scale, they give us more volume, and we have to grow and scale with them. Otherwise, we would end up failing. So far, we're doing fine, and we just get to ride on their coattails a little bit. And the industry is booming and has a massive long way to go. The way I like to explain it to people is that if you look at all of fintech, from PayPal 22 years ago to Sila today, all of us combined are maybe 1% of market share globally of financial services by revenue. If you look at by valuation, it's probably more like 2%, because obviously there are some giant companies like PayPal and Affirm and Wise. But it's still, the global financial services is still dominated by 30,000 banks, traditional FIs, wealth managers, insurers, and in many sectors, fintech hasn't even really begun, or it's barely made a dent. So this decade, I think, is going to be the journey from 1 to 10, where fintech and crypto, I think I count them together, go from sort of 1% to 10%. And that's going to feel huge, because many people who have never used a fintech app or never realized that they could use a fintech app for things like insurance, as an example, will regularly be doing that by the end of this decade.
So that's quite a bit about Sila and the industry, but tell us more about yourself. You were born and raised in India, right?
I grew up in Bangalore, in the 90s. And just like a lot of people in my generation, I ended up becoming a software engineer, did an undergrad in physics and computer science, and then did a master's in information technology. And then really like 18 years ago, I was working for this, software company, and they sent me to the US for 6 weeks to launch a project for a client. And the client was the World Bank in Washington, D.C. The manager there was like, well, that's great, but why don't you just stick around? We have a lot more work for you. And a year later, I left and went to business school at Carnegie Mellon. And after business school, I became a consultant. And it kind of just like fell into fintech. My first project at McKinsey was all about financial services, sort of more old school, with banks and insurers and processing platforms. And then did that for 2 years in the US before I took a transfer and was based in Brussels for a year, not that far from Paris. And in 2009, a friend and classmate from business school sent me an email saying, let's start a retail bank. And that's where my fintech journey really began, and my entrepreneurial journey, because Josh laid out this amazing vision of how banking should work. It was completely different from how banking actually worked, and was like, how can we make this a reality? I'm like, well, we kind of have to start a bank. And then I moved from Brussels to New York and ended up starting Simple. That was one of the earliest fintechs, probably the first neobank anywhere. And even now, when I explain to people kind of how the back end partnership structures and technology structures that typically exist in fintech and more in crypto, I realized that actually I created most of these 12 years ago. And to me, it just seems like, oh yeah, this is exactly how Chime and Current and half the neobanks out there, even N26 and others, are built like this. Nobody quite understands that, and I'm like, well, I guess they aren't intimately familiar with it. Simple itself was acquired in 2014 by BBVA, which is a big Spanish bank. And a few months after the acquisition, I heard about this idea of building an API platform at BBVA, and I got very excited, and I was like, yes, please do it. The world needs API platforms in banking, but please do it right. Don't screw it up.
I just want to ask you, just also, I mean, as you've mentioned, Simple, you had your startup, you had an exit, you're now in your second one. If you can explain briefly, as an entrepreneur, how much easier is it founding and running a fintech the second time around? Is it any easier? Is it harder? Tell me, the different kind of, sensations, experiences that you're having now.
I'd say many parts of the journey are vastly easier, right? So raising money, I still hate the process. I still think it takes too long, but it takes 6 weeks now instead of 6 months. Right? So objectively, on any metric, it's much easier. the kind of people management and team management. So there's a whole like internal sort of psychology to a startup, and a lot of it is tied up in the CEO and the founders. If you guys are feeling optimistic, excited, and taking over the world, your team will as well, right? So that is a lot easier to manage this time around, just because I know how it works. Some things have gotten harder though. Hiring people was not easy 10 years ago, but it was vastly easier back then than it is now. You can just look at the unemployment statistics, and finding good engineering talent is super hard.
Okay, so Shamir, we're just going to take a quick break now, so please don't go away. After this, we're going to continue our conversation with Sila co-founder and CEO Shamir Karkal. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Now, Shamir, I've got a few more questions for you. So, with so much money being funneled into fintech right now, do you think things are maybe getting a little bit out of hand in terms of the money going in and the valuations that we're seeing?
If I'm being totally honest with you, Elliot, I think the whole sector is still undercapitalized and undervalued. Now that seems insane when you think about like, hey, I think 40% of fintech of total venture dollars in the last quarter went into fintech. But we should just scale it by the size of the industry as well, right? Like if you look at advertising, global advertising revenue is like 600 billion. If you look at financial services, global financial services revenue is like 17 trillion. And it makes sense. The real world is not made up of advertising. It's made up of manufacturing and logistics, and of course financial services. It's a gigantic part of the economy, and that's barely begun to change. When you look at how much of an opportunity there is, you actually think that maybe that the amount of money going into it should be 10x more. Now the point which is that we saw this in 2000, right? The promise of the 90s in terms of like the internet transforming everything did actually come true. But we still managed to have a nice boom and then a bust in 2001. So I don't think it's impossible. I think we probably will see some corrections in the next 3-4 years. But the long-term secular trend and the underlying kind of market size is just truly monstrous.
Well, look, one way Sila enables clients to transfer money more efficiently is by way of its own stable coin. Is this the future? Is this the way that financial services are going? Should Swift be, getting ready to pack up its bags and cede the crown to others like yourselves?
I think yes, and obviously I'm talking my own book here, but I think it was Henry Kissinger or somebody who said that the dollar is our currency, but your problem. And this is very true across the world, and it's something that Americans definitely don't realize, because of course anybody who's living in the US can fairly easily open up a bank account or get dollars, just walk into a store, right? And yet there are whole industries in Asia and Africa and LATAM where you have small businesses who invoice 80% of their customers in dollars, and 50% of their costs are invoiced to them in dollars, and yet nobody has ever seen a dollar in their life, right? And so there's tremendous demand for a liquid, easily accessible dollar asset across the world. There's some demand even in the US, but guess what? In the US, supply and demand are well matched for dollars. If you go across the world, it's completely different. Of course, if you're a giant conglomerate in Vietnam or wherever, you can get a euro dollar account or whatever from any number of banks. If you're just a small 20, 50 million SMB, no chance of that happening, right? So the kind of, you look at it use case by use case, and you realize that dollars have already been electronic for like probably 50 plus years. It's just that they haven't been easily accessible to 90% of the world's population. Stable coins have that promise, and that's the really the biggest power of public blockchains is accessibility, right? Like anybody with a computer can access Ethereum or Bitcoin. And so that promise of a stable dollar asset is actually pulling people into the crypto universe, because there's a lot more use cases for stable coins than there are for crypto assets in general.
Right, and I guess perhaps a bit like sausage factories, you kind of know what comes out the other end, but you don't necessarily want to know what's going on in between, or have any idea about it. And maybe this is how the world will be going in terms of stable coins. We probably won't even know that we're using stable coins when we're perhaps transferring money.
AWS powers 5% of the internet, and most people have never heard of it.
Right. And of course, all these other companies that we hadn't heard of when the internet kind of crashed for a few minutes in 2021, I guess that also shows that there's plenty more going on than we are aware of. But unfortunately, we are actually out of time. So I really just want to thank Shamir Karkal, co-founder and CEO of Sila, for joining me today for this fascinating discussion.
Thank you, Elliot.
And I'll be back again next week with another big name from the world of finance and technology. We do hope all of you will be able to join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Program via www.parisfintechforum.com. Hope to see you next time. Bye-bye.